Bloomberg Audio Studios.
Podcasts, radio, news.
Hi, I'm Jason Kelly.
I'm Alex Rodriguez.
And on this episode of The Deal, George Pyne. So George Pyne, Alex, he is the former COO of NASCAR, former president of IMG, now the founder of Bruin Capital. This is a guy that if you're in the sports world, you are 1 degree from him because he's everywhere. He's got a speed dial like no one else, has been involved in major deals, and is looking around the corner constantly for what's happening next in sports.
Yeah, I think in many ways, Jason, guys like you and I, we looked up to Warren Buffett and other great CEOs. I think this is a guy that if you're a young entrepreneur, you should study.
Yeah.
And the reason why he has a perfect trifecta. I mean, you said it best. He's a wonderful family man. He's built an incredible business in Bruin Capital, and he's got world-class relationships with an amazing culture.
Here's George Pyne. All right, George, should we start the show always by having people introduce themselves, their names, and what they do?
George Pyne, founder and CEO of Bruin Capital. Now, I could use the Boston accent, George Pyne, but I'm going to use my real accent.
Listen, when you use a Boston accent, it gives this guy PTSD. So, I mean,
George, you got to know your audience.
That's true.
I have nightmares about that.
That's
yeah,
true.
so use that to your advantage. I mean, if you don't like a question, if you don't like a question he asked, just answer it in a Boston accent.
Just say no mas better. No mas better.
You know, we were wondering how to start the conversation with you. You know, looking at all the stuff you've done over your career. What would you say so far is your signature deal?
Signature deal. I don't really look in terms of that. I think the thing, probably if you ask me, what am I most proud of, maybe? Yeah. Dale Earnhardt passed away on the last lap of the Daytona 500 weeks before I was promoted to run the company. Having to lead the safety initiatives at NASCAR through a very difficult period is probably the thing I'm most proud of. And then, of course, that had two avenues. One was actually putting in safety policies and procedures and creating a R&D center, the first of its kind in the world. And then also, too, navigating the communications challenges of that, because overnight, NASCAR became so much more popular at that time. So that, of all the things I'm most proud of, I think it was that era and dealing with that challenge. And luckily, they've had an almost perfect safety record since then.
What was that moment like? I mean, that was a seminal moment in the sport.
It was tough. That was tough to lose your greatest driver of all time. Now, we had lost 3 other guys in the last 18 months. And then when the greatest of all time passes away, it shook the whole industry right to the core. And of course, we were leading the nightly news 3 nights in a row, and the scrutiny on the sport was off the charts. So that rattled you. It really rattled you to your core. So having to kind of stabilize and kind of like sports, getting up, got to go back and play the next day and dig in there and find your way through it. It was really probably one of the most challenging things, but we came out the other end and made great strides and had a real impact over a long period of time. So if you ask me what I'm most proud of, it's that effort.
Let's talk about that, George, because obviously when the returns are great and you're returning capital to investors and all that, it's all wonderful. But in a very, very difficult moment, leadership-wise, what were some of the things that you did over those 3 days to 30 days to make everybody feel better about themselves?
Well, I think you have to lead by example and taking tough positions. I mean, we installed a Hans device, which was very unpopular at the time. We put data recorders in the cars, which was also controversial. So pushing through a number of changes that culturally and for other reasons the organization had never done before, but you had to do it, right? So what was your option? So having the courage to push through change at a difficult moment and sticking with it and believing it and standing up was really what I took away from that. So I think a leader has to take a stand, do things that are uncomfortable, and be thoughtful at that. You don't really want to go against the grain to go against the grain, but to lead, you've got to take a stand and do what you believe in.
So over the course of this conversation, we're going to talk a lot about your leadership and candidly, like your operational expertise and your operating experience and how that translates into your investment world. But I feel like I have to go all the way back, and Alex knows this, because I've known you for a long time. I met you when I was basically a kid in Atlanta through our mutual friend, Billy Andre. You started out in the real estate world. You come out of Brown. What's the quick story of how you get from there, me meeting you and Helene, like on Club Drive in Atlanta, to today?
As I tell everyone, there's no way to replicate my journey, right? I moved to Atlanta. I had $5,000. My wife had a car with 90,000 miles in it, no air conditioning. My car had 170,000 miles, and only 2 of the 4 doors worked, right? And we literally had to use our credit cards to pay the bills. We had our friend Billy came over to our apartment and said, "I feel like I'm in a college dorm." I said, "Yeah, this is all my stuff from my college dorm." So it was a journey. But again, I come from a family of athletes and didn't want to fail. Like I never really cared about winning, but I never wanted to lose, right? And so I moved away. Went to this new place, Atlanta. Atlanta was great. It was having the Olympics and the Super Bowl, and I worked in a big real estate company and had built 27 buildings in downtown Atlanta. And I was like, hey, we should get in the sports business. And my boss thought I was crazy, but on the side, I built a little sports business, signed up NASCAR in 1995. People forget today. When I went to NASCAR, it was called Winston Cup. 16 races were on the national network. And the company had one office, and it was very small. When we left, we were on Fox and NBC. We had 9 offices.
Hold on. I want to stop you there. It was not called NASCAR?
It's called Winston Cup. It was Winston Cup Racing, right? It's a tobacco sponsor, and people referred it to Winston Cup. The NASCAR brand at that point didn't really exist. And NASCAR at the time when I went there was a company that sanctioned the races and administered the races. It wasn't supposed to be in the commercial side. And so they let myself and Brian France were anointed to go try and develop a commercial business. And man, we took off. We hit it hard. I knew we had a big opportunity. And it worked out. And so it was an amazing run. The industry was great, but I wasn't a car guy. So, I was 40 years old, I had a little itch in me, and I wanted to do something else. And so I had a friend at Goldman Sachs and said, hey, you should go see this guy, Ted Forsman. He just bought IMG. And I was like, all right, I didn't know who Ted was. And I thought, I went by, I saw Ted, I thought it was going to be 30 minutes. It was 2 hours. And Ted, when he wanted something, was pretty compelling. And the notion to go to IMG, work for a guy who is a leader in private equity, to me was
legend in private.
Yeah. He said he invented it. I'm not sure that's true, but I felt like working for him, I could learn a lot, which I did. And obviously IMG was in 30 countries. And so running a company that operated in 30 countries, that was in wide array of sports, working for a guy like Ted, for me, was like, all right, that sounds good.
So I like when you mentioned Ted Forsman, because the first time I heard of him was when he bought 24-Hour Fitness from my partner, Mark Mastroff, and I think they did that deal for about $1.8 billion. Mark just loved working with him. But tell us a little bit about Ted. Our listeners probably a little bit younger, don't know much about Ted, but he's a legend. Tell us what he meant to you, and what were some of the attributes and lessons you learned from him?
I had really 3 great mentors. In Atlanta, a guy named John Portman, who's one of the great American architects, had 25 million square feet of real estate. And I worked with him through a financial restructuring, and then working at NASCAR for Bill France. Bill France was another billionaire, very successful guy. And then working for Ted Forsman. So I learned different things from different people. Ted, what I really learned was he was very conservative and a little bit negative. But boy, if he was able through structure to come up with an idea to minimize the risk, like the guy was all in right away. And so what I really learned from him was, and I tell my kids, the risk reward ratio. What's the upside? What's the downside? Is it worth it? And if it's worth it, you go for it. That's what I took away from Ted. The other thing from these 3 guys, all highly successful, they all worked. They worked hard. They're smart. I'll tell you one other funny one is, so my last day at NASCAR, I'm going to lunch with Bill France and Jim France, 2 billionaires. Where do we go? We go to Steak and Shake. and they're wearing like short sleeves. And we're driving home, and I go, guys, can you give me one piece of advice? It was great advice. They said, know when to squeeze and know when not to squeeze. And that was it, right? But that was kind of having the judgment of knowing when to push and when not to push. So like, watching these guys day in and day out, for me, was a great learning experience.
I mean, what's the transition like from you go from these 2 like iconic people in American business and finance. Was there any sort of transition from working for the Frances, pretty well codified family business, to Ted Forsman? Barbarians at the gate. How do you sort of adjust mentally? Like, what are you going home and saying to Helene of like, okay, this is this is a different world.
Yeah, so NASCAR was, because it was a family business, it really, all you had to do is convince the family of the right thing to do, and you're doing it immediately, no politics, which I loved. And there was no kind of political maneuvering. And so that was great for me. And I was kind of a guy that went out there in the fields and did the work and, brought the goods home and did it again and did it again. And when you went to Ted was an investor, not an operator. And investors sometimes, when they don't know a business, there are a lot of different inputs. And when you're running a global company, there's a lot more politics. And I was not, when I first went to IMG, I was 40 years old. I was like, hey, if you're doing a good job and you're driving results, that should be good enough. And what I learned in that environment was that may not be the case. So it's, I tell people, you need good style, but you also have to, and substance. And I was more substantive, I think, at NASCAR, and I needed to work on the style, kind of the presenting and being a little more political, which I didn't like, quite honestly. And we don't have at Bruin today, but that was, if you said to me what was different, working for a global financier who has a lot of inputs, you've got to be a different set of management skills than working for a family business and delivering results.
And so what was you get to IMG, and what's the biggest challenge that you took on there?
Well, the biggest challenge is trying to reinvent and grow the company, which, one of the things with Ted, which was great for training for me, and I knew it when I took the job, was, all right, my job is to grow earnings, right? Scale doesn't matter. Profitless volume doesn't matter. Growing earnings.
Because he's an investor.
He's an investor. And so how to grow EBITDA was the thing that, we got trained in and measured. But ironically, the one thing that I learned a long time, all the way going back to Portman, when I made a huge mistake. I used to criticize people for not having a plan. When I went and ran my first business, I didn't have a plan. I got really taken to the woodshed on that. And I said, I'll never run a business without a plan. And so how's a guy that, his wife taught him how to drive a stick shift, run NASCAR, and set rules and so forth? Because I was a very big 3-year plan guy. So we had to write a business plan, and you checked in on the business plan once a month on strategy and numbers. And what happened in NASCAR, Bill France was like, you know what? It's working pretty good on the commercial side. Why don't we take this discipline and put it over to the core business? And that's what got me on the racing side from just the commercial side. And that has served me well. It served me really well working for Ted, because I have a very diligent planning strategy. I look at it this way, like numbers are like your blood pressure, cholesterol, or whatever. They'll tell you what's right or wrong with the business, but they're not going to solve it. It's the strategy drives the numbers confirm the strategy. I've always been a big believer in that. Even yesterday, I was in a staff meeting. I'm like, hey guys, let's make sure we have a collaborative approach with our companies, and just someone doesn't show up in December and presents me a business plan. Let's start now digging in with people, and let's go through the drafting of it. So I found that working with people, developing a strategy, and then having the numbers check the strategy has really worked well for me for 30 years. I learned that at Portman, actually.
Yeah. So specifically on IMG, you said one of the things you were looking to do from Teddy's kind of from the top is grow EBITDA, right? Maybe one or two examples of what strategy did you take, and how did you move that number in the right direction?
Well, one of the ones I'm really happy about is IMG Academy. When you take about IMG Academy, they were really great at training athletes, elite athletes, Kobe Bryant, Serena Williams, Maria Sharapova, really great athletes had been through there. But for 30 years, it had never been profitable, right? So I put in a guy today who's at the Barclays Center and running the Nets, Sam Zussman. He was well educated. He went to Stanford Business School, Tel Aviv Law School. Sam came in as my chief of staff, and I put him in to run IMG Academy. And Sam's a brilliant guy, but he had worked at McKinsey in yield management. And running a sports academy is like running a hotel, or in Sam's case, understanding the yield management in the airline industry. So we took IMG from not being very profitable to profitable in a very short amount of time, turning it into more of a place where you could go to college versus where we're going to get the next Maria Sharapova. And I was really proud of that. We bought this amazing IMG Academy, just sold for, I think, roughly $1.2 billion. Like 10 or 11 years ago, we bought 40%. We only owned 60% of it when I got there. We bought 40% of IMG Academy for $6 million and a 2-year payment plan. And it was hard because we did it during like 2009, and cash, we were managing cash tight. I had to go to the wall. That was like moving a mountain to get $6 million to buy 40% of the academy that had never been profitable for, but recently just sold for like $1.2 billion. So anyway, so that's one. And then, we had a lot of fun building the college business. We'd never been in college. And one thing I learned from Ted, which serves me well today, was we had to go around and find places to grow earnings that didn't exist. And so what we did is I looked at everything. We looked at all these different sports. And I had one of my buddies who used to be my CMO at NASCAR. I started getting these numbers on college sports. It was like 190 million fans, number one with young people, ethnically diverse, wealthier audience than golf, right?
Mm.
Think about it. Most CEOs went to college, right? And gender neutral. I called my guy. I said, his name's Roger Vandersink. He's at the Colts now. I said, Roger, I go, where did these numbers come from? He goes, oh, George, we never compared ourselves to college sports. And so we made investments in college sports, and it turned out to be a real
At IMG,
a real growth engine for us.
Wow.
And that was probably in 2010. And we were the first really guys that got the ball moving there.
What does that look like when you're investing into college sports? Like so many things that you've done, they seem so obvious now, but they were not obvious at the time. So how did you invest in college?
Well, so the idea was I took a look at those numbers. I was aghast, right? And then you start looking at, all right, take Atlanta. You have the Atlanta Falcons and the Georgia Bulldogs. Now, we lived in Atlanta, so we know, like, who's more popular? Truthfully, the Georgia Bulldogs.
It's not
Really?
close.
Right,
It's
right.
not close.
It's not even close.
It's
and
not
so,
close.
like, when you look at, all right, what revenues does the Falcons generate and what revenue does the Bulldogs, and all of a sudden the Falcons are way up here and the Bulldogs are down there. So I'm not the smartest guy, but I was like, you know what? I'm going with those guys, and we should be and try to sell like the Falcons. And so it was a big restructuring. I mean, unfortunately we had 400 salespeople. We replaced 300 in 18 months. And so you had to replace people because you were selling differently. We wanted to sell like the Falcons, not like the Bulldogs. And we had to go out and get guys from the other leagues to come in and help us,
So George, I'm
on that
sorry,
journey.
you lost me a little bit. Take me a step back. So you're investing into the Bulldogs, the Georgia Bulldogs. But what does that mean? Does that mean that you're managing sponsorships or you're investing into the university? Walk me through that a little
So
bit.
there were small companies at the time that had the marketing rights to these companies. And what we did is we rolled them up. And when we left, we were representing 85 universities on sponsorship and local media rights, and then 200 universities in licensing.
So you were repping the schools and
Yes.
essentially replacing an infrastructure that was probably like local or regional, right? Like
Right. We were trying to. That was kind of the whole whole
Which,
thought process.
to your point, makes sense now, but transformation at that time.
Oh,
that's
yeah.
so ahead of the curve.
And it was a big driver of growth during the IMG time.
Hey everyone, Bloomberg wants to hear from you. Help make shows like The Deal even better by taking the Bloomberg Audience Survey and have a coffee on Bloomberg for doing so. Visit youtube.com/Bloomberg Podcast and click the link in our profile or community section to take the Bloomberg survey, hosted by our partners, Material. Go to youtube.com/Bloomberg Podcast today. It's really interesting to think about that sort of trifecta of experiences. But what were you seeing in the business of sports that you found so compelling as you moved along?
Well, when you think about sports anywhere in the world, it's the only thing that aggregates hundreds of millions of people together around something as a statement of who you are and what you stand for. So that connection, which at NASCAR, those fans were loyal. In college, you're loyal. A Yankees fan, very loyal. And so what you really want to do is try and tap into that loyalty that's unmatched. And, in this world now where media consumption is fragmented, there are very few things that pull people together, right? And then when you think about all these new devices that can deliver content, you're really tapping into the consumer. So when I look at sports today, like in a fragmented world, sports become more valuable. And where I think sports is going is this whole concept of the lifetime value of the consumer, right? Because really it's a one-to-one relationship. And I'm a Yankees fan. I want Yankees content. I want to know everything about the New York Yankees. And having that one-to-one relationship might give me permission to suggest products and services that are relevant, to the Yankees. And by the way, you can take that to Europe. It's the same thing in any of those football clubs or leagues. It's that passion of sports and that one-to-one connection that's unlike anything else, and will become more valuable because the media and the way we communicate is so much more fragmented today than it was 10 years ago.
So take us through, arguably the biggest sort of personal deal you make, which is you've been working for these like big companies. You've had these incredible, like iconic business figures you've worked for. And then you decide like, I'm going to do my own thing. And not just I'm going to do my own thing, but I'm going to move from being an operator to being an investor. Like, what's that thought process like for you?
The thought process was we had success in growing earnings, and I could now apply this to a different area for myself. And I think like we had talked a little bit about, the transitions. When you're in a company, it's political. And I wanted to have a more horizontal, entrepreneurial, results-oriented kind of situation. So that was appealing to me. And, I was 48 years old, and I was like, hey, if I'm 48 years old and I fail, I'll be 52 or 53 and I'll come back and take a job, right? But I said, what am I going to wait till I'm 60 to take my shot? I was like, age always meant a lot to me. I was 40 years old at NASCAR. I'm like, do I see myself here 20 years or do I want to take a shot at something else? I'm 48 years old. Now's the time to take a shot. I'm 25. I'm going to move away from home. I have no money. So what? If I fail, I can always move back home again, right? So I'm 48 years old. It's time to take a shot. Now, it was a big difference. I'm in the $188 a square foot, 44th floor of the GM building with all the great trappings. And, I'm in White Plains at the Regis temporary office. I didn't even have a secretary. I didn't have anyone to answer the phone. So it really literally was that journey. And I have to say, even at 40 years old, it was nice to know that I was still that scrappy, that I still could get in there and go. And we built this thing from nothing, right? And we built it up. And you look at Bruin today, we operate in 71 countries. We have people on the ground in 20 countries. We work with every major league or federation in the world. And, I literally started from Regis temporary office in White Plains, New York.
So, George, let's go back to when you were 48. You said you want to take your shot now. You talked about a 3-year plan. Walk us through your 3-year plan. How much are you raising? What are you trying to invest in? And this, in layman's terms, for viewers and listeners who don't know much about Bruin. Walk us through that a little bit.
Yeah. So what the idea was to invest in things that were very similar to the businesses that we built. NASCAR, we came in, there were 4 people in the commercial division. When we left, there were hundreds. I don't know how many, but a lot of people, right? And so we built a media capability. We built a PR capability under scrutiny. We built a sponsorship capability, a licensing capability, a marketing capability, right? And then at IMG, we're in 30 countries. We're in wide ranges of sports. I had to do a lot of restructuring, which I hadn't done a lot of. NASCAR was more organic growth, and IMG was a restructuring and then an investing, right? Working for a demanding guy who was really quite bright. So the idea was I did good at that for other people. I had a friend of mine said, hey, why don't you do it for yourself and your partners? I said, well, how do you do that? And he goes, I'll help you do it. And, here we are.
Can you tell us who that friend was?
Kaveh Khosrowshahi at Allen & Company. Kaveh was like, the day that it was announced that Endeavor was buying IMG, he called me up. He said, are you ready to go yet? And of course, I wasn't ready at the time. But I knew IMG was going to sell. And so I had to think about, like, what do I want to do? What's the next step for me? And so I had been thinking about this probably 2 years prior to the sale. And Kaveh was like, hey, man, you got to do it. And I was, first of all, when you work, at least I love the company. So it's always hard to leave. Like when I left NASCAR, I cried, right? It's like, it's hard leaving these places when you give everything you have, but it was just an itch I needed to scratch, whatever that saying is, right?
So, George, I want to go back to when you were 48. I'm 49, so I'm obsessed to this time of your time there. There's nothing harder than raising a first-time fund. You're an entrepreneur, you're an operator, but you haven't really raised a lot of capital. At that point, how scary is it? How big of a fund were you trying to raise? And how difficult was it for you? Or how easy was it for you to raise that money?
Well, by the way, it was a lot harder. It's a lot harder than I realized when I started. I was lucky that my friend Kaveh essentially went to his clients and said, believe in this guy. And if it wasn't for Kaveh, I wouldn't be sitting here right now. And if I knew how hard it was to raise money, I think stupidity in this case was a real asset for me. And if I knew how hard it was, I probably wouldn't have done it. But surrounding myself with good people and people that believed in me. Cave really delivered. And I have to thank, Martin Sorrell too. Martin Sorrell was the CEO of WPP, and he came up to me and said, "Hey, I'm in for a third of the raise as WPP, no matter what amount of money you raise."
Holy smokes.
And of course, for me, that was helpful in the raise. So between, Martin Sorrell and Cave, those two guys really, meaningful. And you can hear it in my voice, I'm very appreciative of those two people, to this very day.
How much was it and how long did it take you?
It didn't take very long. It was like 6 or 9 months, and we raised $250 million.
Nice.
Holy smokes.
Amazing.
Well, Alex, you transitioned from, really probably as well as anyone I know. What was it like transitioning from being a successful athlete to being a successful entrepreneur? And how were you able to, why do you think you're able to do that? Because you've done amazing.
Thank you, George. First of all, I think I've had some incredible mentors, starting with George Steinbrenner. So watching George Steinbrenner execute what I call VCP, that he had the vision, he had the capital, and he has great people. And those people have been there for north of 25 years. So continuity was really important. I saw there was a great arbitrage in people and duration of those people. When I thought about my career, I said, well, if I can surround myself with the best people and take a 40 or 50-year outlook in my business versus my competition was about the next 5 months or the next year, more transactional, I felt that was something that was really good. And then kind of staying in my circle of competence. Sports and real estate is what I know best. And I'm pretty dangerous in those spots. And I'm pretty I don't know much about much else after that. And I just try to stay in those two places, bring in the best people, and just, run the heck out of these companies and do the best I could.
Well, I think it's amazing what you did in baseball, obviously, but I think the real estate and what you've done in business is more amazing because there are a lot of amazing baseball players and athletes out there, but there aren't people that were the best athlete and be able to transition and do what you've done in business. So congrats, man.
Thank you very much.
Because I've been around this thing a long time.
Yeah. You've seen it not go that way, right? And so one of the things that's so interesting, and we sort of alluded to this at the top, is you're getting into the sports ecosystem, which again seems so obvious now. And listen, we look around, we see all these funds that have been created. We see your friend Roger Goodell at the NFL, embracing private equity, which we never thought might happen. But you clearly saw something from an investment perspective in the broader ecosystem early. What was it?
Well, what I saw with Ted and IMG, Ted was really an early adapter. Maybe there's one or two others where he invested. He was a private equity guy that invested in IMG, which at the time was unheard of and somewhat controversial. And what I saw was if you could deploy capital against good ideas in sports, you could get great results. And so the idea was, okay, we've done that a few times at IMG. Ted deployed capital, we deployed capital, and got great results. Now you can do this on your own.
And you're thinking of IMG Academy, specific initiatives.
IMG College or other businesses that we bought along the way and saying, hey, we had a lot of success with that. There's more opportunity here. And of course, when you kind of look back on me now, what was unique was IMG was in 30 countries. Mm-hmm. And so we have at Bruin, we have a global network. We got 14 Bruin advisors, many guys who had worked with me at IMG. Some people who competed with me at IMG are now Bruin advisors. So we have a global network. And sports, there are investment opportunities literally in sports all around the world. So when you look at it from a global standpoint or international, it's a big world out there.
And what's interesting is you're not buying teams, or at least not yet. You have, really invested, again, I'm overusing this, but in the ecosystem, in some of the adjacencies. So what's the underlying theory there?
Well, I think when you look at lower middle market private equity, traditionally has huge growth potential, and you can take these businesses and really grow them. And so when we come in there, we've been through this now. We've experienced growing companies now at Bruin a fair amount. So we go into these middle market companies at one stage and can add a lot of operational expertise. And then obviously with our network now, we open up markets and we can take these companies around the world that quite honestly, they couldn't do it on their own. An example would be Delta Tray. When we acquired Delta Tray, it had no U.S. business. When we sold Delta Tray, half the business was U.S.
And what does that company do?
They do webs, apps, and streaming. And so, when you look at us, we're able to open up new markets, whether it be, I said we do business in 71 countries, but we're big in Europe, we're big in the United States, and we have a big presence in Australia, and we're able to cross-sell.
Right.
So that's a real value add on opening markets. And then, we have a team of people that really work in operations, and I'm an operator.
Right.
So I'm still pretty hands-on. I was talking to a CEO yesterday. We had a problem, and I'm a little more polished than I used to be, but we had a pretty substantial problem. And the old me might have been a little more aggressive. I was like, look, you got a great business, doing great things. And then I said, look, I've made a lot of mistakes, and here's a list of all my mistakes. So let's be honest with one another, and let's work to figure it out. Our guys like that. So if you talk to our CEOs, we do, because they're our best salesmen when we buy a company. Like, they're happy. And it's quite different than other forms of private equity, because the people that lead the deals are deal guys, they're not subject matter experts. So like when you do something with us, there are no boards, there are no committees. Like we actually know what we're doing. Now we advisors and experts, but we have people that actually have done it.
Right.
Not somebody like, I know two people that used to do it. So they're going to whisper in my ear and they're going to tell me what to do. Like, we know what we're doing, and we're not doing healthcare. We're not doing these. We're doing sports and media and entertainment.
So, George, talking about Bruin, if Jason was selling you on a pitch, right? Walk us through what is the perfect, what I call the 2-0 fastball, right down the middle for Bruin. Meaning, here's the space, and we can make it up. Here's the earnings. Here's the EBITDA, and walk us through what excites you about that and how you think about growing and helping Jason as a founder.
Yeah. So it would be somebody earning 10 to 20 million of EBITDA, right?
Okay.
That, we've invested mostly in technology, not always. Well, why technology? Because the growth fundamentals are in technologies, right? So occasionally we'll see things on location, proof in the pudding. We'll see a few things along the way where we think through our expertise, we can add a lot, but most of it's technology. So it would be probably a tech or data related company that had on its own great growth fundamentals, and you really like the CEO. And what the lens I always look through is, can this company grow or not on its own? And if I don't believe in the growth, we can't touch it. Then the other lens we look at is, through our network, can we add value? And it's important, because if you have a great investment, then we can make it even better. And if by chance, which happens, we're wrong, we can prop it up.
Okay, so in this case, Jason's company is throwing off $10 million of EBITDA, most of it free cash flow. He wants 10 times, you want 5 times. How do you land on, like, is it 7.5? Is it 6? Obviously, it depends on the growth trajectory. Walk us a little bit through how you think about it.
Yeah, well,
I like this company that I'm running. This is great.
You're just doing the numbers now.
Yeah, exactly.
well, usually there's a margin of what the multiple is. Now, I will say, for us, like, we don't want to be with someone who, if it's all about, I want to get the last nickel. Ironically and thankfully, I think, more than half our deals are one-on-one deals where people have either sought us out. There's not really a process.
There's not an auction.
Because if you think about it, if you do your diligence on us and you're a founder, like, we're quite compelling if who you sell to matters, right? Because, like, I've worked my whole life. I've built this company up. And now, I want to take a little cash off the table, and I'm probably going to take more risk, because we'll deploy capital to do acquisitions. We'll open up markets. And of course, we're going to be pushing for growth. So then if you're a founder, you're like, well, who do I want to do that with? The guy who listed all his mistakes when something went wrong before he got into what went wrong? Or somebody who's highly educated, wagging their finger at you, that's never run a business? And that's really so that with our discussions, not so much about the multiples. It's about, hey, do we culturally agree? And I always tell the guys, because I am a bit of a salesman, like, I don't want to sell. I'm not selling anything. Like, once we acquire your company, we can never part ways. So I don't want to convince you to do something you're going to do. So I'm always like, hey, if we buy your company, these are the expectations. Are you comfortable with it? And if you're comfortable with it, this is how we roll. And, that's kind of how it works. So the price thing, that there's a range of the price. We're going to pay a fair value, whatever that might be. But if you're about the last nickel, it's probably not a guy that I want to spend the next X amount of years with.
Jason, I'm not about the last nickel. I'm not about the last nickel.
I'm hugging up the mic. I'm going to give it back to you, but it sounds a lot like the Berkshire Hathaway, Charlie Munger, Warren Buffett model.
Yeah.
One of the areas obviously very near and dear to us is the media world. We're sitting here on our podcast. You invested in Box to Box, I believe, not too long ago, which everyone, I'm guessing, listening to or watching this show has consumed something that Box to Box made, especially Drive to Survive, which I feel like revolutionized the way we think about sports and sports media. Talk to us about that deal, how it came about, what you saw at this moment with that deal.
Well, a couple things. I see two great CEOs. James and Paul are very talented people. I have a good friend of mine, David Hill, who used to run Fox Sports, and I called Dave, and he raved about them. It meant a lot to me. And then their product is really good. They do Drive to Survive in full swing. They do kind of the behind the scenes for sports, around the world. They're a market leader, and they fit well with us because they're global.
Right.
We're helping, we've been able to add some relationships and contacts with them as well. But I felt like I always wanted to get in media if I could find a smart way to do it. And where we see growth for them, the podcasts, short form media, they haven't really done. They haven't invested capital. They've never taken risks on the deal. They've never done acquisitions. I think there's opportunities for branded content. So we saw 4 or 5 things that we think we could add. Mm-hmm. But again, it was guys we believed in and guys we felt like we could add something to in terms of opening a few client doors for them. They don't need too many because they're very global themselves, but they're great at what they do. And I love being with them because you get on a phone with them and or Zoom, and they want to be great. I'll give you a little example. So one of the things, my companies are very under leveraged. It's good in one way, but we have to be a little better at that. And so we brought all our companies together in London, and I brought in an expert on debt because I learned a long time ago making adults do things they don't want to do. Probably not going to work out too good for you. So I brought in this expert on capital markets and had them talk to the companies. And these guys embraced it. And we just got our first credit facility for the company, but it was because they were interested. And as I say to the guys, look, we're not going to lever it up. We'll be below lower leverage than everybody else, but let's be the best we can be.
Right.
And they want to be the best they can be. And it was kind of a new area. So that's somebody that wants to be great at everything they do. They want to embrace new things, and they're just hungry, and they're really smart and creative. So I'm really happy with those guys.
And so when you're when you're getting to know a CEO or a founder, what's that process like? Because I know you to be incredibly personable, very humble, great family man. What's your vibe? How are you getting to know somebody?
Well, often you go to dinner with them and try to socialize. And what I'm really trying to decide is the person driven? What's the team like? And do I believe in the growth fundamentals of that business? And if I believe the growth fundamentals of the business and I really believe in the CEO, then it feels good. And can I add value? Can we add value? If we can't add value, then all we are is placing a bet on something. And I'm not a bettor. I got to know I can add value to something great, or if it goes wrong, can I add value?
I want to go back to college sports if we can, because one of the really interesting things about you, I'm totally taking advantage of knowing a lot about you here, is that you obviously have been involved with college sports from a business perspective, but also as a dad. Your son Drew is a very successful quarterback on the college level. I do wonder, being able to wear those different hats, what's your perspective on sort of college sports at this moment? Because it feels like such a revolutionary and candidly sort of fraught moment for college sports. How does it feel to you?
Well, I think it's going through change, right? It's going through change because it's very successful, and it's so successful that the money became so significant that, you have to share it with the players. I mean, when you think about the college football playoff game, one game, it's $84 million in media rights before all the other things. If you have 80,000 people paying $100 a ticket and all the concessions,
So one game is worth $84 million.
$84 million. Do you think for a 2 or 3 hour game, if that game's generating over $100 million for 3 hours, don't you think the guys on the field should participate? I estimate it to be $6 to $8 billion a year generated in college sports. Shouldn't the people that are on the field to play be? And so what's happened is the courts used to be deferential to the college model, but in this amount of revenue, the courts have now sided with the players. And so you're going to have to change. And by the way, change isn't easy. And it's hard in college because nobody's in charge. There's, everyone's their own independent person. If USC and UCLA were part of a conference till they weren't.
Right.
Right. So you have a bunch of competitors that work for their self-interest. And so with no one in charge, in a highly successful industry, you're going to have a little bit of turbulence. But I think at the end of the day, it'll all work itself out. We went through all this with the Olympics, right? Oh, we shouldn't play the athletes. We shouldn't play the athletes. Boy, I thought the Paris Olympics were amazing.
Unbelievable.
Right? So in those, everyone's making money. Nobody cares.
Yeah.
And 5 or 10 years from now, this thing will make its way through. And, I have a little bit of laughter about this because I'm semi-knowledgeable in football, and my family's been playing college football for over 100 years. Those playoff games last year, Michigan and Alabama, it went down to the last play.
Yeah.
Right? Like the product on the field, pretty good.
Yeah.
So all this talk about, you're going to blow it. The Florida State game was a blowout in the whatever bowl it was, but so what? There are always blowouts. But those playoffs?
Yeah.
Amazing. So the off-field stuff of what the player movement is, do the players get paid? It'll get figured out, and it won't be easy.
I mean, one of the things that I know Alex and I both admire about you and have watched over the years in various venues, some of which you've been, the convener of, everyone. I mean, you really have cultivated an unbelievable, there's no one that I talk to in sports who's more than 2 degrees and often 1 degree away from you. Is that purposeful? What's the method to that?
Well, I think a couple of things. There's a little bit of a track record, right? NASCAR was a good job, right? And then at IMG, a lot of people, we were their clients. But I think truthfully, like an old shoe, if you're around long enough and you're a good person and you deliver results and you do what you say you're going to do, it pays out for you. Now, everyone's got their angle, right? That's my angle. If I tell you, and I learned it from Bill France when he hired me, because I got 3 things for you. He said, tell the truth, work hard, don't embarrass the company. I'm still quoting it today, right?
Yeah.
And I knew that if I told somebody at NASCAR we were going to do it, we were going to do it. And so that had an influence on me. And even Ted was honorable. And so to me, it's hey, tell someone you're going to do something, you do it. You try and do it in a nice way. I try to emulate Roger Penske. I told Roger I was with him this summer. I'm like, some of these guys had impact on me. And so I think that is the basis from which you build out trust and respect over decades, right? And that's what you're seeing in the benefit. That's my stick. Doesn't mean it's everybody's stick, but that's my stick.
And so, one of the things that's fascinating about you, George, too, is that you're so tied in at the highest levels of all the major sports in the U.S. and abroad. You're one of the only people I know who I feel can call every commissioner of every league and get on the phone. What do you hear from those folks these days about sort of the state of the sports leagues? Because obviously that has a big direction in terms of your own investment thesis of where things are going. Take us inside some of those conversations.
Yeah, I just feel you have to be kind of bullish right now, because when you look at the NBA, to get 2.5 times on their media deal is really amazing. Adam did an amazing job there. When you look at the NFL with all the contracted television revenue they have, really strong. NHL's got a long-term deal, strong. Baseball's doing well. Everyone seems to be doing. Even NASCAR did a great TV deal. So all this stuff about how the media is changing and the fragmentation, nevertheless, the sports have held up really strong. So I don't know. I think the big issue in sports today is that you do see institutional investors coming into sports. Capital is going to change the game. And so my advice to someone is, hey, if I'm running a sports team, I'm running a league or an organization, I need a capital plan to differentiate myself from my competitor, number one. Number two, I need a defensive capital plan. So whether I want to act on it, I need a phone call hey, if something's coming in with capital is going to disrupt my sport, what am I going to do about it? So I don't think you can just sit back maybe like you used to and say, well, that's not for us. You have to have a capital plan.
Yeah.
Look at golf. I'm not going to make any commentary on what's good or bad, but look, somebody with capital showed up and the game changed. The other guy, he had to go out and raise capital, right?
And a lot of it. And so, if you're in sports, whoever you are, you better have a capital plan to go on offense and defense. Yeah, that's an interesting, but I hadn't thought about it in exactly that way. But, you think about the NFL, if private equity is going to come into, even a half a dozen franchises, that doesn't just change those franchises. It changes the other 26 is what, like in terms of them, having to figure out what their plans are going to be in terms of their spending or
well, it's going to change,
right?
So I think they've done a really good job of limiting it, right? And making sure that, that the investors have really no say.
Right.
Right. And so their life's not really changing for the NFL, but they're benefiting from an influx of institutional capital into the industry. That money's going to go to provide liquidity for limited partners that might have had a hard time getting liquidity, might solve some family issues on some of these teams that are family owned. And it's going to provide capital perhaps for real estate investment and reinvention in the franchise. And lastly, it's going to increase the value of the franchises because you have more bidders. So again, the institutional capital, while controlled in this case, is changing the game, right? And so, and probably over time we'll change it more, as you know better than I, that in other sports the number is higher than 10%. And in order for these franchises to keep growing and growing in value, you're going to have to look at different outlets for capital. I mean, to buy an NFL team now, you need $2-3 billion a year. Gets a little thin. And think about what rights you get. If you're one of the guys in the Commanders that put $400 or $500 million for no rights,
right?
So that's getting harder and harder.
That's a pretty expensive season ticket. Isn't
it's a nice problem to have, Frank. But you're the victim of your own success. So you're going to have to understand the capital markets and have a long-term capital plan. But again, it's all against the backdrop of success, right? Everybody would love to have these problems, I think.
All right, so let's do a quick rapid fire round. So this is the only thing I'll say is keep it tight. We'll bounce it back and forth. What's one word to describe your deal-making style?
Decisive.
What's more important to you, your instinct gut or data?
Instinct gut.
Who's your dream deal-making partner?
Someone who's well capitalized and smart.
What's the best piece of advice you've received on deal-making or business?
Know when to squeeze and know what not to squeeze.
What's the worst piece of advice you ever received?
I don't know. I didn't pay attention.
Do you have a hype song before you go into a big meeting or negotiation?
No, but a good workout's a good substitute.
There you go.
If you can only watch one sport for the rest of your life, what sport would it be?
Football.
American
football. Sorry.
And what's your favorite team?
Patriots. My dad played for the Patriots. I have to go for the Patriots.
What team do you want to see win a championship more than any?
Missouri Tigers.
There you go.
There you go. Go for your son.
Yeah, that's right.
One fun fact about George Pyne that if your colleagues heard about it, they would be shocked or surprised.
I played the viola.
Okay.
Wow. Listen, this was really, really fun. I feel like it's decades in the making. So thank you so much for doing this.
It's great to see you and great to be with you guys. Thank you so much for the opportunity.
Thanks, George.
Thanks, George.
Thanks so much for listening to The Deal. If you never want to miss a story, become a Bloomberg.com subscriber today. Check out our special intro offer right now at Bloomberg.com/podcast offer or click the link in the show notes. You'll also unlock deep reporting, data, and analysis from Bloomberg reporters all around the world.
The Deal is a production from Bloomberg Podcasts and Bloomberg Originals. The Deal is hosted by Alex Rodriguez and Jason Kelly. Our producers are Anna Mazarakis, Stacey Wong, Lizzie Phillip, and Victory Veyes. Original music and engineering by Blake Maples. Our managing editor is David E. Ravella. Our executive producers are Jason Kelly, Brendan Francis Newnham, Jordan Opplinger, Trey Shallowhorn, Kyle Kramer, Andrew Barden, Kelly LaFerriere, and Ashley Honig. Sage Bauman is our head of podcasts. Additional support from Rachel Scaramazino and Elena Sasangelis. Joshua DeVoe is our director of photography. Rubab Shakir is our creative director. Art direction is from Jacqueline Kessler. Casting by Julia Manns. Our associate producer is Natasha Abelard. Camera operation by Ryan Cavatero, Jesse Ridner, and Suma Hussein. Our gaffer is Alex Brown, and our grip is Max Garstack. Our production assistant is Gabriella Demates. Alex Diakonis is our video editor. Listen to The Deal on Apple Podcasts, Spotify, or wherever you get your podcasts. You can also tune in to the video companion on Bloomberg Originals and on Bloomberg TV. Thanks for listening.